Morning folks, James here. It's Friday, the end of the week. I'm going to do a quick video for you now quickly on the technicals and go through a few things. The Bitcoin thing that I'm looking at here in Vitsand has actually moved to a different town, a different place. So Plettenberg Bay is the place to go. We're going there tomorrow. So I've got no feedback on the Bitcoin story, but let's look at the markets and see what's going on. So a couple of things moving today already. It's early in the day, so we might have a bit of a cadenza later on in the afternoon, a crescendo. So let's see how we go. Euro moving up, pound moving up, dollar index moving down, as per plan. My target for the dollar index is 93, which would push the euro up to 1.18 and possibly 1.2. We're now long on the euro, short on the euro yen. Those are the only trade positions that we have on. So the euro has regained the 20-period moving average and broken up above support, which is really good news for the euro bulls. And looking at the weekly chart, just to remind you of my target, up there, the 200-period Bollinger Band and the 78.6% Fibonacci level, 1.18. Potentially we could get to 1.2 and even the top of this range, which is quite possible at 1.2350. So if you're along the euro, it's looking pretty good. This is the weekly chart in the euro. Also a nice big bullish candle this week, strong rally up. So we remain long on the euro and we remain short on the euro yen. The euro yen was testing this trend line yesterday and still just holding on it. We're below the 20-period moving average, but supported by the 50, the red line, and the purple line is the 200. The 100 is the black line. So it's still holding up now, and our red line is now getting left behind, the downward arrow, and we've now surpassed it by some distance. But that's okay. We're making lower highs and lower lows on the daily chart, so I think that'll be okay. Nothing on the dollar yen. We try to get short on this. I was trying to sell at the trend line. We bust up right through it, so we didn't get a chance there. And then the next stop to sell into, we didn't reach. So we didn't get that short trade, unfortunately. But if this keeps moving down, it should pull down the euro yen. The other trade I'm looking at and looking to get long on is the Aussie dollar. We talked about this in yesterday's video. So we're moving along sideways. I'm looking for this sort of symmetry with a sort of squiggly bracket or inverse head and shoulders formation right here. I've got an alert at 0.65. A daily close above there will put me long on the Aussie dollar. And I've also got an alert down near the trend line, which also put me long on the Aussie dollar. So the general idea is that the dollar probably will weaken a bit further. We're trading just under 100 right now, the parity level, and I think we could get down to 93. Now going across to NASDAQ and the S&P, I put a poll up this morning on X saying, is this going to be free fall Friday or not? Yes or no? Simple question. 60% of people think we've got a free fall Friday coming up today. That means we should see the NASDAQ down, S&P down, German 30 down. Whether the 60% is right or not, I don't know. I think they might be, but this week's a pretty critical close, really. And whether we can keep these gains after the V-shaped recovery after Liberation Day remains to be seen. But overall, we're in a bear market on both the NASDAQ, the S&P, and the German 30 even though we've made a new high. We're just above the 78.6% fib, but just below the recent all-time high double top. That's the NASDAQ, and we're short on the NASDAQ. The same thing on the S&P, just above the 78.6% Fibonacci level and just below the all-time high double top. Notice that we had a stronger move down in the S&P than the NASDAQ, the broader based index moving slightly lower. Anyway, we're short both of those. We're also short the German 30. We reached near the top of the long-term channel line. This channel goes back several years, and you can see every time we've reached the top, we reversed. Every time we've reached the bottom, we've reversed. Even though we've made a new all-time high, surpassing the double top at the channel top last time, we're turning just under the channel top again. So with the German 30, the S&P, the NASDAQ, I don't know whether this thrust, the V-shaped recovery, the Zweig breadth thrust will force us up beyond the recent all-time highs, or whether we have a top in here now. The jury's still out, but technically we're in a bear market on the NASDAQ and the S&P until or unless we make new all-time highs. We haven't done so on these two indices yet, even though we've done so on the German 30, and there is also a chance that we could get to new all-time highs just fractionally, like we did on the German 30, and then reverse. There's a double top all-time high. We got above there. We reached the channel top again. So not really a bear market, but we're in this bull channel, and we'll see if we can react to the top of that. We've got two new position alerts. We went short on MSTR, and we went short on QBTS. Let me go through each one briefly. Here's MSTR. We've reached the 61.8% Fibonacci level. We formed a mini double top there on a sort of intra-week or intra-month basis. And on the second visit to the golden ratio, the golden pocket, we rejected quite strongly yesterday. I got short halfway down through that candle, and we're now moving down, and we're still more or less at the price that I got in at. The reason for going short here, despite the big rally in Bitcoin, is simply a technical play, but it's also a hedge against my long Bitcoin, where I'm quite heavily committed. So if Bitcoin goes up, MSTR will probably go up as well, but we're very strongly long on Bitcoin, so it won't really matter. But if Bitcoin goes down, then we've got a bit of a hedge on the MSTR trade. So all good, and we'll see how that plays out. And I'm hoping that today will give us some clarity across the board on all of these indices and all these stock names. Another very interesting play that we had yesterday And this is super interesting, super quick. So I never got the chance to actually illustrate this, although I did put a tweet up. QBTS, the cloud-based software, go and read all about what they do. Broke out of a long-term range, quite recent. QBTS, the cloud-based software, go and Google them if you don't know what they do. Very interesting company, broke out of this range some time ago. We got long on the gap up at the market open on Tuesday, right at the bottom of this candle, and we got out at $19. I then actually shorted this at $19, just a small position, much smaller than the long position that I had on, and I'm looking for this to move back down to where we got in, to close that gap and probably probe the channel top. Notice the 20-period moving average coming up from underneath. That'll reach the channel top when we get there, I suppose. And then we should bounce off the 20-period moving average and the channel top for the next rally. And at that point, we'll switch. We'll change from short. We've been long, now we're short, and we'll change back to long again for this to move up to new all-time highs. So that's the plan. All we need now is for this to move down so that we can get some profits on the short trade and then get a decent entry on the long trade. I certainly wouldn't be buying QBTS at this price. Right, let's move on to Bitcoin, new all-time highs. I've just drawn a simple trend line in here, folks. I'm very concerned that the Bitcoin whales, the funds, the institutions, and even the so-called Bitcoin treasuries are leveraging up on their positions and also borrowing money to take those positions. That's a very, very bad situation to be in. And the FOMO this cycle doesn't seem to be coming from the retail traders. In fact, there's a little bit of a reticence maybe on the retail side. But the FOMO plays seem to be coming in from the corporate whales, and that means if there is a crash, a collapse, and it only takes a tiny thing to trigger that, if this market doesn't keep on going up and it's very, very top heavy, that top will just fall down the cliff very, very easily. All it takes is a few down days and a couple of whales deciding to liquidate their positions. Let's hope they don't do that. I don't think that's their intention, but if they were to do that and the market started moving down, it will trigger those top heavy stop losses and hedges and options, whatever situation they've got set up there, and margin calls maybe even, and this could move down quite fast. We're accustomed to 50 to 80% pullbacks on Bitcoin. Notice that we have just broken out of an all-time high, so it's unlikely to happen right now. A little bit higher maybe. Whether that will actually even happen or not, or whether it'll be much more severe. I know people have got targets for Bitcoin down to $10,000 on this pullback, basically a complete collapse. I don't think that's likely at all. In fact, I think that's incredibly unlikely, but I think we could get a decent pullback. So be careful, don't get top heavy. You'll notice that most of my positions are down at the bottom here, and I'm getting very light on my sort of addition rate as we get higher and higher up. I don't want to get top heavy with my large positions up here. I'd rather keep them down here where they're much more safe. An easy way to exit your Bitcoin trade, if you want to be very cautious and you have concerns like I do, then you can just simply use this trend line and the 20-period moving average, the green line, just underneath it. And a daily close beneath one or both of those could encourage you to trim your position, maybe take a stop loss for profit, or maybe hedge your positions. I don't know. You'll have to decide that for yourself, but that's the sort of thing I'm looking at. Basically, we've got this black line at $100,000, strong psychological level, and also a fairly decent technical level over here. So that's Bitcoin. Don't ask me about altcoin season or whether that's going to happen or not. Maybe it will, maybe it won't, I don't know. But we are long on Ethereum and XRP, not to the same extent as we are on Bitcoin. I'm still short on gold and long on silver. Gold's actually popped up quite a bit now, and I'm going to have to look at this a little bit later on. I'll probably just wait until next week and see what happens. I want to go to the day chart. This is the 4-hour chart on gold. Basically, if gold is going to move up further, and it may not do, we had a reversal candle yesterday, we should stop at the 61.8% Fibonacci at 3,360, or back up here again at the 78.6 at 3,420 odd. In any event, I think and I hope that we'll hold beneath here, at least hold beneath the double top. I'm looking for a breakdown through the short-term trend line and the 50-period moving average down to the longer or intermediate-term trend line and the 200-period moving average at around about $3,000. A little bit higher, a little bit lower. And with a bit more momentum, we could get down to $2,700, $2,600 into this big order block conglomeration. Either of these levels will be excellent places to buy more gold. The reason we're long on silver, and we're also in profit on silver, is it's simply a hedge against the gold position. Ultimately, I'm looking to be long on both of these trades. The gold trade is a pullback trade. It's a retracement play, a mean reversion, if you will. I don't like using those cliched terms, but it's essentially a counter trend trade looking to get those dips into a better buying area to resume the bull trend. So I've got the long position on silver as a hedge against the short gold position. Essentially, I'm bullish on both of them. Copper moving sideways for about 3 weeks now, nothing to comment, but holding up pretty well, surprisingly, which bodes pretty well for the stock market. Going across to energies, we've just rolled over on my natural gas futures, as you can see. I woke up this morning, had a look at this, and I went, what? What's going on here? But it's just the rollover. That's not a big bar, it's not a big candle, it's just a change of contract. So we've now rolled over, and the futures price at the Henry Hub is $3.68 currently trading. That contrasts with the spot price down here at $3.30. We're short on that one. We don't have any positions on the futures, but I'll be looking to get short on the futures either today or more likely on Monday. We're closer to $4 now on the futures, and the closer we get to $4, the more inclined I am to sell. Let's have a look at this on the daily chart quickly. So although we haven't rolled over on the NYMEX yet, we've switched to the next contract here at Black Bull. As I said, currently trading at 3.69. Notice that we're now at the 100-period moving average, this black line, just below this recent swing high and this order block just above there. So I think we're in a new range now, somewhere between $3 and $4. Obviously, there are going to be probes above and below that sort of range. It always happens. These ranges aren't perfectly neat. But we are now entering the selling zone. I'm going to get rid of all of my drawings and just draw a simple trend line from the top to the bottom, right here, like that. And you can see we've reached the trend line. So I'm going to be starting to look for shorts on the futures. My target for the shorts is, first of all, the 200-period moving average down here at about 3.22. And then down to $3. We could get as low as $2.90 or maybe even slightly lower, $2.80, somewhere around there, but then I'll be looking for a rally back up to $4 thereafter. Notice that this level is also the top of that previous gap, which is interesting, not particularly significant, but certainly interesting. So we'll definitely be looking for short somewhere around here on the futures, either today or on Monday. We'll see how we go. In the meantime, we already have a short position open here on the Pepperstone continuous contract, as you will know. We got short up here at the red arrow, looking for a move down to this previous swing low where we got long originally, and then a breakdown below there should take us down to the top of the order block at $3, and I suspect we'll probably get a little bit lower down to the bottom of the order block at around about $2.90, $2.88. So as the ETF continues to move down towards $3, we'll see the same sort of thing, I hope, happening on the futures, and we're looking to short the futures as well down to $3 with a much bigger opportunity all the way from $3.67 down to $3, compared to $3.40 down to $3 or $2.80 on the continuous ETF. Quick glance at this chart. We're still long the dollar rand despite everything that's going on with this country and the US. Quite inexplicable, really. Bond yields came off yesterday. Actually, we had quite an encouraging candle. This is a dark cloud cover candle, which is a bearish reversal candle, although we did have one before that, which didn't work out too well. Just really messy and choppy, and that's not really that significant. At the same time, TLT, the Treasury's ticked up a wee bit, and you can see in pre-market we're slightly higher. That's also a good candle on TLT, a piercing pattern, which is a bullish reversal candle. We have no positions on VIX. I'm looking to buy down into 12, 13, somewhere around there. This trend line is a little bit deceptive because VIX doesn't trade in trends and trend lines, so I don't expect, unless the markets suddenly collapse today, will it be a free fall Friday? Go and fill in the poll on X and tell us what you think. I think it might be, in which case the VIX might tick up. On the other hand, if we have a pretty boring and dull Friday and gain a little bit, VIX will just dribble down again. So it's going to be an interesting day, really, overall. And then quickly across the softs and grains, no change at all since the last video. We're long on sugar, short on cocoa, short on coffee, long on corn, long on cotton, nothing on orange juice, long on wheat, and nothing on soybeans. I've covered these in some detail in the previous video. I'm not going to waste your time by going through it again because nothing's changed. So that's it, folks. I think all eyes are on Bitcoin today, and also whether there'll be an altcoin rally. Some people think that's going to happen starting today. We'll wait and find out. But just to reiterate, I'm very worried about the FOMO leveraged borrowed longs that institutions are taking on Bitcoin. We all need to be just a little bit cautious and cool down a bit. Although the retail traders don't seem to be as aggressively long as institutions. Very interesting. I don't think it's ever happened before. So we'll see how that pans out. Uncharted territory, really, as we are also in uncharted new all-time highs on Bitcoin. Well, I hope you enjoyed that, folks. Please like and subscribe. Consider joining the channel. It's $1 a month, and the links are below. See you in the next video. Take care.
FTSE's wobbly, traders cry, Wall Street screaming, sell or die. Numbers dropping like a dodgy bet. Even me, Nan, stressing on the internet. Oi, it's free fall Friday, markets on the highway, bears in the driver's seat, taking it sideways. Oi, don't get mugged, mate. Love is too late, should've sold Tuesday.